For 30 days straight, I've tried 3 different strategies on 3 different pairs to know which one exactly can be profitable in the long run. And I've tried it on gold, GBP USD, GBP JPY just to see how best it works. We've traded news, we've traded anything you can think of in the Forex space for us to come up with the backtesting results that we have today. I'm going to guide you on how you can utilize these strategies. Very simple to use, very simple to understand. Even a beginner trader can use it. So on this trade breakdown, we're going to look at GBP USD on the 15-minute time frame. Okay, we're going to break down what we look for and how we find those 100% pure price action good setups for you to take, for you to be profitable. So without further ado, let's jump into the charts and see how you can capitalize on this strategy. So when we jump down to the charts, there are always 3 things we have to understand. Okay, these 3 things are essential. First thing that we look at is what is the direction of the market. Where is the market going? Is it making higher highs, higher lows? Is it making lower lows, lower highs? To determine where we are going to take a trade. So when we looked at this time frame and the higher time frames, we already asserted to say this market is still making higher highs because it's breaking its highs, making lows, breaking its highs, just like that, meaning the market is in a bullish trend. There's no questions asked about that. Okay, the second thing that you look at is the zones. Where is the market going to go? Where is the market coming from? Where are we going to execute our trades as far as how the market is printing these candles? Because you can't just randomly execute a trade minus understanding where exactly the market is coming from and where it is going. So all these setups were shared in the 3 Confluence trading community. If you want to be part of the community, there's a link in the description, or you can just message me direct on WhatsApp. There's just a subscription fee that you pay once off and you're in the group for a lifetime. So the last thing that you look at is the candlestick. When you put all these things together, you come up with a strategy that will guarantee your wins majority of the time. So in this particular trade that we are looking at, the market is breaking its highs, making higher lows, breaking its highs. Again, we expect a low, then after that, a continuation. So there are 2 things involved. It's either the low can be formed here, okay, can be formed here, bounce off, and do a continuation. Or if it does not do that, what can it do? It can just move up from here. Okay, so those are the 2 scenarios that we're looking at because we're looking for buys. So if it breaks above this zone, then we jump on it and look for buys. If not yet, if it bounces off of this trend line that it has been consistent of, then we can jump on a buy. So this is what we were looking at. Say, okay, if we break above this zone here, our stop loss is going to be somewhere there, and we are targeting a 1:2 type of trade. Okay, and always remember your target is not just random. Also look to your left, where is the market likely to end up, okay, plus other factors. When all this was in play, okay, when all this was in play, what did we wait for? As you can see, the market dilly-dally there. Eventually, when it broke through and closed above here, we were like, okay, we're good to go. Okay, we're good to go. Or the 2 things also involved. You can either wait for a breakout and retest or just jump in as soon as it closes above, depending on the type of candles it is forming on this particular zone. And as you can see, the market pushed above, came back to the zone. This trade was one of the most annoying trades if you're looking at it, because it came back to our entry point like 3 times. Okay, went up again, came back again to our entry point. Okay, until again for the 3rd time until it eventually hit take profit. All these trades were shared, and this is what the community received. Say, we're looking at this. If it breaks above, we're good to go. Okay, we're going to look at another trade as well that we did take. GBP USD as well, continuation buy as well. Simple setup, nothing complicated. So this was today's trade. And we recently just hit TP just now after FOMC after the release of the news. Okay, so today we did share two setups that we shared today. Okay, so the first setup was this gold setup. As you can see, this is what we're looking at, and we expected it. So this was the setup that we were looking at as far as gold. Okay, we waited for that break above and a continuation to all the way there. So this is what was shared in the trading community. Okay, and eventually the market did hit TP after the news was released. As you can see, news release and the retracement there, but our trade eventually was this. So let me just run you through what was the thought process during this trade. The time we were looking at this second trade, this is what the market was looking like. Okay, this was the zone of interest for us. So when you see this, the market is pushing bullish. It's making high highs, high lows. It hasn't started breaking its previous lows for us to determine that the market is in a bearish trend. And if you know the textbook pattern, this is a bullish flag pattern. What happens in a bullish flag pattern? The market breaks out and does a continuation. Okay, so usually what this pattern looks like is like this. If for those that are, so this is what it looks like. You have something like this. Okay, it's a very common setup that happens in the markets, something like this. So this is what we had formed. Okay, the market is coming from down here and does its thing as we're just waiting for the break above. So we had a zone that the market was failing to break here. Immediately we wanted to see a break above this high. Okay, our stop loss was going to be there, and our target was, as usual, a 1:2 trade, somewhere above this zone, somewhere there. Okay, this is how the trade setup was. Very simple, nice looking setup. So when the market started moving, I did alert my group to say, guys, this is the setup we're looking at. This is what we're waiting for. If price breaks above, we are good to jump in. Okay, and the market did eventually. This candle was the break above. Okay, market did break above on this candle. So but we were almost taken out of this trade. Okay, if you look at the next move that the market made, it did almost half of the distance, then sort of retraced back. Okay, we were dilly-dallying here and there because we wanted to move our stop losses into break even. Sometimes it adds an advantage, sometimes it doesn't, guys. So eventually, after the release of FOMC news release, the market did tap into our take profit. So this is a simple setup that was shared with the trading community. And always remember, guys, keep your trading simple, never complicated. Okay, once you follow these three key basic principles, trust me, it's going to be a game changer. We even have a book about the 3 confluence trading strategy if you're interested in getting it. And yeah, always remember, a pip a day keeps poverty away.